more about exactly, what we go after and yeah, on both the supply and demand side. So on the commercial real estate ownership side, we do equity recaps into stabilized, cash flowing core and core plus assets. We typically only go up to 49.9999% of the assets, and that's mainly for alignment with the sponsor for with our investors in the offering, but it's also for loan transfer and tax restrictions, mainly up in New York City. Our model is pretty straightforward from the real estate perspective because it's passive, non-voting, permanent capital, which is essentially the holy grail for real estate owners. It never has to be paid back, such as a fund when it terms out. And then on the demand side, each of our buildings is its own set of securities via a special purpose vehicle that purchases into the building. And these securities are structured as publicly traded partnerships, PTPs, which are basically the sister of the MLP, like in the oil business. So all the benefits of owning direct real estate flow through to the investor. And then each of the securities is registered with the DTCC and QSIP, which allows our holdings to be held in brokerage accounts around the world. So our securities provide our investors with transparency, tax advantages, yield, and other benefits from owning direct real estate. And that's essentially what we've done. And we are now looking to get our second offering qualified, which is actually pretty imminent. We actually put it into the SEC as a private offering about a month ago, and we were surprised. They actually came back to us with no comments within 7 business days, 9 calendar days, and then we have it filed publicly now, and we're expecting for the offering to be qualified soon, and then that one will be opening to the entire public for anybody to buy those shares. And that building is actually up in Harlem. It's a multi-use property, anchor tenanted by Wells Fargo, and then there's two healthcare companies on top of it. But it's at a really great location, basically Main and Main in Harlem, and just a really burgeoning area with a lot of foot traffic, et cetera. So we're really excited about this asset.
So just to kind of summarize, you had one friends and families offering, the Gateway Garage Partners,
Yep.
and now this your second investable deal then is the one in Harlem.
Correct. And
Okay.
then we have a couple more deals in the wings. The next one most likely will be a property out in the Capitol Hill district in Seattle. But we do have a pretty good pipeline of properties all around the country. It's just, we're just trying to do these first two offerings first, and then we're going to be really, increasing offerings onto our platform.
I think it's great, and I will admit that about 10 minutes to 12, so like 20 minutes ago, and just preparing to have some questions and just items to talk about with you on this Clubhouse, I went on your website and I started looking at it, and it took me 3 minutes to answer the questions and open an account with Lex, and I downloaded the iPhone app, and I'm number 3,000 and something in line, I guess. So you have some pent up demand for investments. Why don't you tell us about that?
Yeah, well, funny enough, our waiting list was much larger than that, and we actually let in about 5,000 people. It was actually sort of a mistake, but it actually worked out to our favor because those people have really engaged with us and are like very, very eager to be buying up our first two offerings. But yeah, we have been building the wait list back up, and we're getting people high demand. I mean, I think, yes, last night was something like 67 people signed up for the wait list. But we've basically been flying under the radar in stealth mode because we're building our systems basically for the last 3 years and our infrastructure. And now we're ready to, open up to the world and really tell our story. We're going to be doing a whole educational series with a video about what Lex is, as well as doing some videos with our first real estate owner on like why they invested in the asset, and why they think it's like Harlem is a great area to be investing in, et cetera. So we're going to really be educating not only investors but also real estate owners about our platform. And NAR Reach has been amazing. I kind of am the one who spearheaded it, and I'm the person who manages the program for Lex. But we love those guys. They've been really helping us and are really helping us to like spread the word. But up until I would say a few weeks ago, we really haven't. We've been in stealth mode and barely, even had any press.
So we can all still kind of get in early, so to speak, in line. So that's
Absolutely.
great.
Yep.
So how is it? I think it's 5 or 6 years ago. The crowdfunding was out there, and I did a couple of like mini investments with them. How is this different from crowdfunding with some of those platforms that were out like 5 years ago?
Sure. So first off, we do not require accredited investors. That's number one. Some of them don't either, but typically their minimums are much higher. Secondly, those guys are fiduciaries and asset managers. They own the building. We do not. Lex is the plumbing and the pipes. We are the introducing broker dealer. We are the investment bank that structures these offerings. And then we are the trading venue, which is our alternative trading system. But we have no real skin in the game with our offerings. We don't manage the buildings. We like to partner, with the best sponsors. You maybe know this or maybe you don't, but my business partner is John Bren. His father is Peter Bren of KBS, who passed away, and his uncle is Donald Bren of the Irvine Company. But John, one of his best quotes that I use all the time is that Lex is positive selection bias. All of the crowdfunding platforms and many of these other real estate groups are actually negative selection bias. And what he means by that is that they are competing against the Brookfields and the, Irvine companies of the world, and even the Goldman Sachses of the world. We can partner with all of these people, including private equity funds, to mutual funds, to closed end funds, to just family offices. These guys can't. They're actually competing for deals, and a lot of times, like, let's just use Cadre as an example. Cadre, if they're looking at like a Class B office building in like some other market, they're probably like, I would say, like the 3 to 400th call, and crowdfunders, they might be the 1,000th to 3,000th call about that building. We can actually not only partner and work with Cadre and these crowdfunding platforms, but we get to work with like the Brookfields of the world. And if you didn't know this or not, Rick Clark, former chairman of Brookfield, is actually on our board. And he saw the applicability of Lex, that he wanted not only to invest in Lex, but to join our board. And like one of the things he had said to us early on was, man, if you guys could get some of those annoying LPs like the insurance companies or the sovereign wealth funds out of our deals, who like watch us do everything and have comments about, our leases, etc., like we would love to do that. And if you could do $1 billion equity recap on one Brookfield place, which would be 50% of the equity, we would love to do that with you. So again, we are positive selection bias.
So, John, since we represent realtors and other real estate professionals, is there a way that they can participate in these deals outside of being an investor? If they have, let's say, a property owner that has a property that might be a candidate and they want to sell through this way, is there a way that they can get paid, or is there any involvement they can have in this process where they get paid?
You better believe it. So we charge the real estate owner, let's just call it 3 to 6% for the total amount of equity being recapped. It's not charged on the total capital stack, which a lot of these other guys will charge for an LP sale. It's only on the equity being raised. But that's a really healthy economics, and we're able to share those economics with the brokers as well as with distribution channels, i.e., like the banks and like RIAs. So, one of my big things for joining NAR Reach was that I was talking with Duke Long even before I joined, and I was like, we're a technology company. We're never going to be able to have a lot of boots on the ground and don't want to have boots on the ground. And you know what? The brokers are the ones that really own the relationship with the CRE sponsors and owners. So we want to partner with the brokers on the 99% of the commercial real estate that is not for sale. Typically, only 1% of commercial real estate at any point in time in the United States is for sale. Now, the broker has a new tool in their tool belt and are able to actually go back to their real estate owner relationships or new relationships and say, hey, do you want to get some liquidity on that building? Maybe it's taking chips off the table, or they created value, was a value add deal and are like looking to cash out, and or just want to get some LP owners out. So yes, we want to partner with brokers. We are talking with the JLLs of the world. I'm going down and speaking at Miami Commercial next week. I've been talking with Paul Tauchi, Jennifer Woolman. We're talking with many, many different groups, and we would love to be able to pay the brokers.
Great. I've had a couple conversations with you, and it would be good to share, because we talked about it. So which types of asset classes are sort of in your sights? There's certain asset classes that make more sense versus others. Could you give us a little overview of what your ideal property is?
And Paul, I'm sorry, I didn't realize that was you talking. Thank
Yeah.
you. Um, so ideally now, as we're starting off, we need stabilized cash flowing properties, right? Because we're a brand new marketplace, we can't have any hiccups. So we are looking for best properties that will have a quarterly distribution that we will be paying out to our investors. So we're targeting, I would say multifamily is probably number one. Office in good areas with good tenants, multi-use, but we're shying away from retail and hospitality for good reasons. And then also industrial doesn't really work for our platform because we are essentially a yield platform, and cap rates obviously are are so low on industrial. So we're targeting, let's say, a 5 to 9% IR or cash flow, cash on cash, with some upside. A lot of the deals that we're looking at, whether it's that, let's just call it the COVID discount, and or they have an amortizing loan, there's upside there. So those are the type of deals that we are targeting, and we are, sponsor agnostic. We are geography agnostic. We are just looking for, good deals.
Size of the assets that you're looking for, a particular, is a portfolio or an individual building?
Only individual assets. This does not work on the portfolio. And we so right now we have to pay a lot of service providers, from the lawyers to helping us, the auditors, to groups helping us get the K1s out. So right now, it basically makes sense for us to do anything above a $10 million equity recap. So let's just say that was the 50% of equity in the building, and I don't know, like it was 60% levered. So that would probably be, a $50 million building. But our first couple of offerings are much lower because we are building out the marketplace. So again, we did $1 million offering. Our second offering is going to be about 2.15, and then our third offering is going to be about $6.5 to $7 million. And then the offerings behind that are much bigger. But look, we're willing to have loss leaders in the beginning to start working with best of breed sponsors. So if they want to like test out our platform with a smaller deal or a smaller equity raise, we're totally happy doing that.
And so, John, how many people do you have vetting deals and sourcing deals for your company? What does your personnel list look like?
Yep. We are about 28 strong now. When I joined back in June of 19, just to let you know, I was employee number one, so I was number four after the three founders. But that breakup is, I'd say, about a third engineers, and then about a third the real estate team, and then a third is our legal slash customer support slash administrative. So the real estate team, we have a real estate underwriting team, which is about four, and then we also, or I'm sorry, five, because there's two junior analysts. And then we also have a real estate investment committee, which I participate in, but like Rick Clark participates in that. So like he helps us to vet deals and to make sure, that they're good deals that are going to be coming onto the platform. That is one area that we're looking to expand on. We are raising a pretty sizable Series A right now. And most of the money, I would say, was probably going to be going into engineers to help build out our partnerships with both distribution networks, as well as different groups to be bringing real estate to the platform, and then also the real estate investment banking team, because we're going to need more guys to slice and dice these deals and make sure that once we turn on the faucet and a lot of deals are coming in, which is starting to happen, we need more investment bankers, and then we'll have some more people hopefully to help me sell these offerings, because right now it's really just John Brennan and I that are working on all the filling the offers and distribution channels.
That's interesting. And you refer to engineers, are those like programming people that support the build out of the software platform, or I wasn't
Yeah,
sure.
yeah. Well, so we have an iOS app. We have a web. We also have specific engineers that like are working to integrate us into all these financial systems. One guy was like an expert, working with Orbis. These are all like financial management tools, and Instanet, etc. So the engineers that we're hiring are on a by need basis. Some of them are just generic, but some of them have like specific, like this guy that has like networks. So we're going to keep on growing out the team where we see need fit, but definitely we're going to need guys that know how to work on like banks, because that's one of our biggest pushes. We can also pay the banks to distribute our offerings, and we can pay them to do that as well. So basically, they'll almost come in as a co-underwriter of all of our deals, and then they will sell it into their wealth management clients, which they're actually very excited about doing. They just need a little bit larger of deals, because they're not going to get out of bed to sell it to their clients for a $6 million deal.
Hey, John, I got a question for you. This is Michael. I keep hearing you say investors, and I was looking at your website. The investor who, as you say, starts at $250, they're actually buying a share, or what is it exactly?
Yes, yes. So each share in each building is $250. So yes, that's exactly what they're buying, and you can buy that on our web or mobile right now. Eventually, you can actually also. So Gateway Garage actually sits in a Fidelity account, a Schwab account, a TD Ameritrade account, and one other that just happened. I have to find out. But right now, we're not actually plugged into into all of these groups. And again, that's what the engineers will be helping us to do. But eventually, you will be able to just like go onto your TD Ameritrade and say, buy 20 shares in 286, which is our Harlem property. That is coming very soon. It's just that's another reason why we're raising this Series A, in order to be able to build out all of these partnerships.
So the Gateway Garage is, so if I have a Fidelity account, can I go in and put in GWYGU and buy shares in that right now, or is it like not liquid?
So you can't just right. So if you wanted to actually do that, the way that we did it with these shares was we actually had, it's called like the DWAC process, and basically it just brings those shares over from our web or mobile, and Apex is our custody and clearing account. And what happened was it actually brought it over into like the TD Ameritrade account. Now that we are set up with those guys, the three that I said, and I'm sorry that I have to find out what the fourth is. Yes, you can actually go on there and actually purchase those shares.
And okay, and then what does the increase look like if you put up, $2,500 when you opened it? Is it trading about that level, or is there volatility at all?
So
Or
Yeah, so one of the big things about our offerings is that they're not correlated to the stock market like, the REITs. I mean, most of the REITs are still trading below NAV. I mean, look at SL Green. But let me just see, Gateway Garage right now is trading at $244. It opened at 250. There's not that much volatility if you just go for the last six months that it's been trading. There really hasn't been that much volatility. I mean, it's in between 253 and 244.
And then the
Um,
yield, the yield that's going to pay is going to be what, 6% or something like this? Is there
this
a
one,
preferred yield or not
yeah,
really?
this one's like 5.5 to 7% over the next 5 years.
And is it set up with like a preferred yield, or does it just float depending on the cash flow of the property typically?
Yeah, it's just based on the cash flow of the property. But yes, so our investors receive quarterly distributions. So if it was a 6, they'd be receiving a 1.5% each quarter.
That's interesting. And there's no general partner or anything like that to make things come out even or to, participate on the back end if it's sold later. It's just a straight equity deal.
Yeah, so para pursue everything. So if the sponsor's paying a dividend to themselves, they're paying a dividend to our clients. And when the building sells, our investors just get para pursue of whatever their ownership interest is in the offering, whether it's higher or lower. But obviously, we are hoping everything is higher.
Oh, it's very interesting. It's very clean and easy and straightforward. So thank you for that.
Yep.
Hey, Tamika, we're going to be in New York in a few days, and we could probably even check this property out and knock on the actual building itself.
Exactly. Yes, we could definitely go and check out this property. I have a quick question, John. How many assets do you guys have so far on your platform? I'm on the platform right now.
Yep.
So how many assets are you guys working with?
Again, it's the only one that's listed is Gateway Garage. That's the only offering that's been qualified by the SEC and is trading. We
Okay.
have two others that one is already submitted into the SEC, and then the second, which is the Harlem property. The third, which is, if you see it on the platform, Solis. Which is in Seattle. That one is going to be going into the SEC soon. And then again, we're not listing all the other real estate owners that we're currently working with, but we do have a pipeline and expect to be listing more of those assets on the website very soon, as to be coming.
So just to put your crystal ball hat or your Karnak, the magnificent hat on so you can look into the future. If you have, you're just obviously getting out of the gate with actual investments that we can all participate in. Say, by the end of the second quarter next year, realistically, how many properties do you guys think that you'll have that are actively trading, just like in a range?
Yeah, I mean, our goal is for in 2022 to be doing one building a month. And hopefully it scales up from there. So, let's just say in the middle of next year, we're hoping to have about, 6 or 7 buildings on the platform. But in 2022, we're really planning to scale up and to be doing at least one filing with the SEC per month. And the goal is to do more. Our all of our everything is templated, so it's like basically rinse, wash, and repeat with putting in the filings. So we're, as we are able to, really interact with more and more real estate owners, and this is again why we're planning on partnering with the brokers to really get our name out there for real estate owners to understand who we are and to want to, get some liquidity on their assets via the platform.
Anyone in the audience have any questions? We can bring you up and ask any questions that you have. If there's anyone, you can raise your hand and get you involved as well. I think John did a great job of describing it, but there might be some questions out there. I also want to recognize that we're distributing this and syndicating this to other platforms like Facebook and Twitter, and we've been doing that and getting a lot of traction. So not just the folks that are on here listening, but we've been getting a lot of listeners in different formats.
Thank you, Paul. I really appreciate that. But this is definitely a collective effort, and we're really just trying to get our word out right now. So we really appreciate it.
I'm trying to invite some people up to see if they have any questions or anything. I want to invite Kevin up.
Hi, Andy. Did you have a question?
Question?
Everybody. Tamika, thanks for the second invite. I declined it first, and then I realized we're talking about that New York property. John, what do
Yeah.
you have for South Florida properties that are going to interest this audience most? And how may we help you more directly?
We do have, I can't talk about them, but we do have a few groups that we're dealing with down there. One of them being an investor in Lex, having a few properties down there. But that is definitely a market we're extremely interested in. I'm flying down a little bit early to meet with a few, one real estate owner and then another person that's pretty plugged in the community down there. So very excited about new relationships down there. So Kevin would love to, talk to you one-on-one afterwards, or even potentially next week while I'm down there. I'm going to be down there Thursday and Friday.
Great. And where are you staying?
The Biltmore, where the
Okay.
conference is being held.
That is that's one of the favorites of this organization.
Great.
Yeah,
Awesome.
Kevin, you better be at the Biltmore at this conference. And
October
one
1st,
thing,
right?
yeah, of course. And so we'll see. You can meet him there. And in fact, we're going to give the Lex and the other Reach companies a high top for them to be able to show their, meet with the members at the breaks and things.
You
So,
might, Paul, we may want to give them two high tops because it might be a crowded area from what I see with the Reach companies that we've talked with.
yeah, it's exciting.
Yeah.
Andy,
Please go ahead.
please.
Hi, everybody. Hi, Tamika. Thank you for pulling me up. Thank you, Paul, for putting me up on the stage. Hi, John. Nice to meet you. I am Andy with Douglas Salomon, and I do have a question for you. There is no way on your profile to kind of reach you more information. I would definitely love to connect with you afterwards just to get more clarity on the subject. And I don't know if you have an Instagram or LinkedIn or anything else that we can connect afterwards.
Sure. Yeah. Or do you mean me directly, or do you mean that Lex Markets doesn't have any way for you to reach out?
Well, with you and obviously with the company as well. But yes, in order to, create more relationships, it would be great if we can connect with you offline as well.
Yeah, Andy, definitely. I mean, I have everything. I've LinkedIn's probably best, but yes, I'll connect with you right after this. Okay.
Fabulous. Thank you so much.
Thank you.
So John, let me ask you in the self-interest category for myself and the other realtors on the call. Is there a realtor like broker package that you guys are going to develop that sort of helps us to explain to some of our clients who might be looking for like a recapitalization or an equity infusion? So we could streamline that, maybe a PDF or something that gives us some bullet points to review with the potential owners, or is that on your website?
So two parts to that. One, this was under my direction. We are building out a commercial real estate broker tab, which will be very useful for you. And then secondly, yes, I can share very soon a document with you that you'll be able to just share with your relationships.
Yeah, I think that would be really helpful for all of us to kind of get in the game with this and understand what our I guess we'll visit the broker tab and understand what our deal would be for bringing you into a relationship that we might have. So that sounds really exciting.
Cool. And we already do have a document, which I know, I'm pretty sure I've shared it with you, Paul, but basically that just kind of breaks down how we can, compensate the broker. That is ready. But just to get you some more, whatever, 2-3 pager that you can share with the real estate owner. Sure. I can do that.
This seems a little, what I don't know if risky is the right word, but it seems, because I know some people, we've worked with some auctions for commercial real estate, and that seems again, I don't know if risky is the right word, but it seems a lot more unknowns because you could sell it or not sell it. And this is structured in a way where there's a little more certainty for the seller, I would think.
Oh yeah. Well, first of all, we do this on a best efforts basis. And like if the real estate owner is not happy with how much we have raised, if we like let's just say we did it, we were expecting to do a $10 million raise and there was only $6 million worth of demand. The real estate owner could say, nope, sorry, we don't want to do this deal. And it's at no cost to the real estate owner. We bear the brunt of all that. And so they just put down a deposit, which is extremely low, and but besides that, they're not on the hook for anything. We pay for all of the filings and all the work that we do with the SEC and all the audits, so the real estate owner really has no risk. But knock on wood, we don't expect to have any failed offers.
Do the brokers carry any charges back?
I'm sorry, what do you mean by that?
So basically, if the seller doesn't have any costs towards it, do we have to make any payments or anything to put, with our listings? So if we are bringing a listing over, are there any charges towards the brokers or are they not?
Good question. I mean, no, we haven't really thought through all of that yet, Andy. But no, we let me go back to the team on that. But no, I mean, I would expect that the broker shouldn't have to bear the brunt of anything either.
But you guys would never. Maybe you could re-explain it to me because I'm not 100%. If you're only recapitalizing properties, you're not trading properties, right? The property doesn't sell. You just come in to an existing owner and get, refund them maybe up to 50% of their equity. Is that correct?
Yes, this is not complete sales, and we don't do acquisitions. We are not doing also value add right now because it needs to be cash flowing. But yeah, no, this is our platform is not you. You won't come to us if you want to sell a building. You're only coming to us if you want to take some cash off the table. And just to let you know, I mean, the way that we love to explain this is that, the real estate owner really only has, at this point in time, two options to create liquidity in asset. And the owner can, go to the bank and borrow money from the bank, which, obviously increases the leverage on the asset and, creating a much riskier position for the equity owner of the asset. And like most of the families, especially in New York City, that have been through so many different cycles, they don't want to do that. I mean, one of the families that we're dealing with in New York City, he only has a massive $750 million asset on Madison Avenue, 25% leverage. That's it. And he does not want to go to the bank. His family never will. So we are the only other alternative for the real estate owner to do a recap on a portion of the equity, and then to replace the existing equity capital with permanent non-voting capital that never has to be paid back.
So in essence, you're selling certain portions of the total amount of the property, correct? So like kind of like shares.
Yes.
Okay,
So
gotcha.
just of the equity,
Got it.
up to 50% of it.
Got it. Okay.
Pablo,
I
did
have
you have a
yeah,
question or a comment?
yeah. I have a question. Like, as an investor, I guess you would identify or let's say advertise a certain property. It would be an initial offering, or it could already be in the secondary market. As the investor, is there a package of basic information I get on the property, like rent rolls, financials, a lot of disclosure for, even though I'm a passive investor investing $250, do I get a good amount of information to know, like, is this the type of property that I want to invest in? And then again, over time, is there like a mark to market, or is there further information, appraisals that give me the value of my investment? And finally, like, will the share price reflect the value, or will it reflect supply and demand on people buying and selling shares?
Yep.
Sorry.
So if you sign up for an account, I mean, our research tools are awesome. We kind of, mimicked, and I think we went even further than, E-Trade or any of these other brokerage sites. But like, if you go on there, there's many different tabs, including the history and the summary and like on the specific asset. And then the financials, which actually goes into depth, and you can actually export to Excel all the historical financials. And then there's about the team, the business plan, the market, everything. You can the Form 1K, the offering statement with the SEC. So that's like the offering circular. You could download all of this off of our website. So yes, basically, as we've talked to private equity real estate owners, they're like, wow, like the amount of information that you're providing on your website, we could almost go to a full investment committee with everything that you're providing on the website. So yes, anything you want to check out, Pablo, for that asset, it's there. And so this is a marketplace. So it's supply and demand that's basically, going to determine the price of the security. It is I would say it's dependent on the market, because like if you're in a strong market and like let's just say another building in that market was sold for much higher than what it was purchased for, or what the market thought that it was going to be sold for, we would expect for these shares to trade up. And also, just to let you know, one of the interesting things that we've learned from the real estate owners is the real estate owners know these properties the best, right? And let's just say like that, even Gateway Garage sold down to $220. Well, that real estate owner knows the property the best, and it probably is going to be like, wait a minute, why is this thing selling down 10%? And they can just go and buy back the shares, just like SL Green could do on the S&P. So there's many different dynamics as to how the shares will trade, but it's the marketplace. It's supply demand.
That's super interesting. So company, it's people could actually do stock buybacks, and sort of play the market in their own property during times of a downturn. That's
Absolutely.
very interesting. It opens that door to small property owners, just like with huge Fortune 500 companies. That's a very interesting aspect.
Yep, absolutely. I mean, they're not stocks, but essentially they are. They're like over-the-counter stocks. That's what these things, our offerings are.
So in essence, you're talking about investors who are SEC compliant, correct? Does the owner have to be as well, or no?
No, and the investor doesn't have to be SEC compliant, or just our offerings are qualified by the SEC as a security. But investors don't. It doesn't have anything to do with the SEC. And again, both accredited and non-accredited investors, and the sponsor is not like qualified by the SEC. It's our security that's qualified by the SEC.
Got it. Okay.
But I guess it's different from a fund, because a fund might have like a whole bunch of properties, and the properties might want to reflect a certain strategy as to yield or appreciation, things like that. Here, it's an individual property with management that is comprised of people that have attitudes and their own personal interests. The owners, the majority owners, the GP, let's call it. So as an investor, you're passive, and you don't know how long your money is going to be in there. You could be cashed out at any time. So basically, you're just riding along whatever the owner does, kind of.
Yeah, but I mean, thought of a different way, you also have full liquidity on this property. Whereas, I mean, if you're talking about a closed end fund, you have no idea when you're going to get your money back. I mean, John Bren loves to joke about this, but there's so many KBS buildings and out of a few of his funds, which he would love for, the fund to, sell the asset, but they haven't sold the asset. So he's stuck in so many buildings in LA that he would love to, be able to be cashed out on those buildings, but he's still stuck. Whereas on our platform, there's full liquidity. You could trade into 286 and like, let's just say when it's qualified, and then you could trade out the same day if you really wanted to. So you have full liquidity on these offerings, and you're really just buying a piece of the building. Whereas on a fund, I mean, or a mutual fund / a REIT, I mean, you're really buying into the management company. And I understand what you're saying. Like, yeah, they're going to have a strategy, but you're buying into the cash flows of the building.
Are you looking at owners that any certain profile of an owner as far as how many years they've owned it, or if they own other properties? How is the vetting of the owner or what is the ideal owner or expectation you have?
We definitely do due diligence on the owner, making sure that they're, not corrupt, etc. There's not really any guidelines to that. We are trying to work with more seasoned owners and operators, especially as I said, to start the platform, off. We just don't want to have any mistakes. But due diligence on not just the building, but due diligence on the sponsor owner is extremely important.
How much does the owner get to keep in
What do you
percentage?
mean?
So, because you're telling us that you're selling a percentage of the building, correct? In
Yep.
order to create those what I want to say is quote unquote stocks on the building. Um, so how much is the percentage that the owner gets to keep?
Sure. So let's just say if they sold $100 worth, or make it even better, $10 million worth. Again, it depends on how much we're actually charging the sponsor, right? But if it was 5%, then they would be keeping 9 point. Am I doing my math right? 9.5 million dollars. Is that correct? Maybe I'm doing my math wrong, but it's just whatever we charge a sponsor, less that is going to be what they're going to keep.
Got it. So I'm looking at more as a percentage. So if they're doing 70, 30, their owner's keeping 70, you guys keeping 30%, right? And then in essence, you're selling the 30% to all of these other, liquid based investors, right?
Well, yeah, but no. Just think about it as, again, whatever the amount of equity that we are recapping, which we're actually raising the money, and we're
Mm-hmm.
giving that owner all of that money less the fee that we charge them, and then now out the Lex investors now own that portion of that money. So again, if it was the 10 million, the owner's cashing out that 10 million less our fee, and then now our investors actually own $10 million worth of the building.
Right, which is kind of what I'm saying. So if okay, so let's say the asset's worth $20 million, right? That's in essence what the market's stating that that property is worth at. The owner gets to say, well, I want to sell, 30% of my property to you guys, to Lex, and that's what you're going to divide to your liquid investors, correct?
Okay, so yeah, in that, well, again, it's based on the equity, right?
Right.
So are you saying selling 30% of the equity in the building?
Correct.
Right. So I don't, we'd have to come up with the numbers of what that 30% is, right? Because
Right.
I don't know. Let's just say it's 50% levered. Again, that would mean that it was $10 million worth of equity, meaning you said 30%. So that's $3 million worth of equity. So, or $3 million. So that would mean that the owner would receive $3 million less our fee. And then our investor, the Lex investors, would own $3 million worth of the building.
Exactly what I was trying to get at. Because as a broker, we have to be able to explain that correctly to the owners so that they don't feel that they're losing out the entire, ownership of the building. So
Oh, yeah. Yes,
yeah,
exactly. That's why we like to stay below 50% of the equity, because we want the owners to have skin in the game and to, manage the building appropriately.
got it. Perfect.
And
Thank you.
really, there's not a better, for an owner that wants to get cash out of his building or her building, there's no better way for doing that, because if you try to bring in a new partner, you have decision-making issues and partnership issues. You guys
The
have come up with a way to get around that, where you're bringing in money with no partnership issues attached, all of which is better than putting new financing on the building that has all kinds of constraints. So it seems to me to be a very innovative concept you've.
And Stephen, one other point to that, you are exactly right. As I said, Rick Clark's not the only person that said this. We're in touch with a lot of the major families in New York City, and all of them say man, if you could just get these annoying life insurance companies out of our building and, replace that with these passive, non-controlling investors, that'd be amazing. But secondly, one thing you didn't talk about was there is no marketplace out there right now for you to be able to get fair market value for an LP position. If you were wanting to sell your LP position in a building right now without Lex, you're going to be selling that for, 20 to 80% discount. uh, I mean, just you're going to have to go to that group that buys LP positions and they're going to be naming their price. There's really no liquidity for you, but we are providing the liquidity to real estate owners to give them fair market value. We work with the real estate owners on what they believe is fair market value. And obviously we do our own underwriting too, but like that, we come into a mutual agreement.
So that's really who you're, not your competition, but that's the segment of the market that you guys will eventually displace, are all the people who are doing the private placements where they have no liquidity. You give us whatever the chunk is, it's a bigger chunk, yet you're right, you can't get out until the general partner decides to sell the property. And
Absolutely.
you have no voting control as a limited partner anyway. So it's a very interesting innovation. Congratulations.
Thank you very much. Yeah, and we're excited. Look, we are a new marketplace. We love to do conversations like this to get our word out, but I'm really excited. I will be at C5. I'm also going to be obviously down in Miami, and then the week after, I'm at Blueprint in Vegas for the entire week. But I have a pretty jam-packed schedule. I think starting in mid-August, I'm on the road something like 10 or 8 of the 14 or 16 weeks. So I'm going to be traveling a lot.
Well, we're certainly looking forward to seeing you at the C5, and then again on Friday next week is our commercial conference. Miami Realtors is hosting a commercial conference there. It'll include 6 REACH companies. 2 or 3 have already been on our Clubhouse talk, and thank you so much, John, for coming today. We also have some panelists there on cryptocurrency and blockchain and how the evolution of that segment is going to affect commercial real estate. And we also have a transportation panel, a transportation-oriented development panel. It's going to be hosted by John Dom, one of our local, really erudite to the max realtors, commercial realtors here, and he's going to talk with several players in that market, the president of Brightline, the train that's getting ready to commence service to Orlando in a year or so, and several developers and brokers that are going to be active in that transportation-oriented development space. And then we also have the president and CEO of the Miami Visitors and Convention Bureau. So he's going to talk to us about the future of visitors and conventions here in this post-COVID environment in South Florida. So we have a nice plan set up, and looking forward to seeing everybody in a week. John will be there. John, we can't thank you enough for helping us understand more about Lex. It's a great innovation that you've done, and I'm excited. I hope I'm not 3,000 and something in line for very long. I can tell you that.
You won't be. We are planning on opening up the wait list at some point in the near future, so you will be getting notified about that.
Okay, because I'm 3,068, so I hope I don't have to wait too long as well.
Sounds good.
Tamika, I wanted to refer you because I get like a referral point, so I missed out. I got to get I love the send the link around and get a send out referrals. That's a great thing on the website.
Thank you. Yep. Well, again, we're just trying to get the word out.
Send it to me, Stephen. You can get my referral.
What is the referral on that anyway, John? I saw it, but I didn't pay that close.
I know I didn't pay any attention either.
Yeah, it's if you refer someone, you basically get $10 to spend on our website. Towards any offering that's going to be coming out.
Awesome.
Paul, I'm going to refer you and Mike Hinton as well, just to fundraise.
So you
I'm
already know
just
what's
telling you,
coming
I'm just being transparent up front. I want 5 of that $10.
All right, you and I will split it, and we'll go have a drink in New York. How's that?
Yeah,
exactly. And we're gonna and we're
probably just water in New York for $5. But let's
That's
see
true.
what we
and yeah, bottled water. And we're also gonna go check out the project as well in New York while we're there.
Great.
Well,
Yeah.
this is
Well, do we have any questions from anyone else in the audience? Anyone else wants to ask any more questions or make any comments?
I had a final question, but I don't want to hug the room.
No, go ahead, Andy. No, it's a very
I'm
enlightening
sorry.
conversation. Go ahead.
Like the question girl, so I'm always questioning a lot of things. So John, I had a final question for you. What happens if, you start to lose out investors on one property? What happens to that particular property? Do you guys drop it off, that your platform, or what happens in that instance?
I don't. Can you explain? Lose investors?
So let's say that you have a property and you have it on the, on the platform, and you've sold, quote unquote shares on that property. And for whatever reason, the property either gets, bad news or bad,
Oh, yep.
you
Okay.
start out people. What happens to that seller? What happens to all those shares that were sold?
I mean, it's going to drive the price of the stock. I mean, but are offering down, just like any other stock in the stock market. But it's not like going to be delisted or anything like that. And again, our expectation is that the marketplace. There's always going to be buyers and sellers. So again, the real estate owner who listed the property, and if they can get 10% discount on their own property, which they know is an amazing property, they're going to be buying those shares back. So it wouldn't cause a delisting of the property. It'll just drive the price of the share price down.
Got it. Okay.
Do we have any more questions or anything? I think this is a really great conversation today. Well, John, if anyone else doesn't have anything to say, I want to thank you so much. I've learned a lot from this conversation. Um, and I'm looking on the website, and I can't wait to come see this property in New York this week as well.
Awesome. Yeah, let me know after when we see each other on Monday.
Okay. Paul, Stephen, do we have any more last remarks or any questions?
I don't have anything. Thank you, Tamika, for hosting this again, and Stephen as well, and John for being here.
really appreciate everybody. John, it was very interesting talking it through, and thanks for just explaining everything so clearly and concisely to all of us. It's hard to grasp some of it, so appreciate
Yeah,
your kindness in going through the details with us today.
no worries. And a lot of people tell me I speak fast, so I'm sorry if I spoke too fast sometimes.
No, but you know what? I understood everything that you were saying, so which is really good. Even
Thank
though
you.
you say, yeah, I understood everything that you were saying.
See
Well,
you
thanks
Monday.
everybody. Thank you, Tamika and Paul and John. Andy, thanks for your input today. Really appreciate it.
Bye, Pablo.
Thank
Thanks,
you,
everyone.
Pablo. All right, thank you, everyone. So we don't have any questions or anything like that. We're going to go ahead and start ending the room. Join us all next week, and I hope you guys have a great and wonderful weekend. And we'll look forward to seeing you guys back next week, Friday, so we can talk about the C5 and also the commercial conference as well. So we're going to try to also stream live from the commercial conference, so that's going to be very interesting as well. So,
Thanks
you have
again.
any?
Thank
Thanks
you,
again.
everyone.
Bye.
So you guys have a great weekend. Bye,
All
Have a
right.
nice
everyone.
weekend.
Thanks.